We're now joined live by Ian Dyson. Ian is Group Finance and Operations Director at M&S. Ian Dyson, thanks very much indeed for joining us again. So how was it?
We thought we had a good Christmas, actually. It was, you've seen the numbers, and we were positive like-for-like. About 2%, just shy of 2% if you adjust for the timing of the sale. Both sides of the business positive, general merchandise and food. So overall, we're happy with our Christmas trading.
Ian, so what's next? What's 2010 going to bring? Is it, how fragile are things on the high street?
Well, I think we've been clear for some time that we think 2010 is going to be a difficult year, and we echo what others have said next, for example, yesterday. I think there are a number of factors. You've got the rise in VAT, you've got pressure on direct taxes, you've got pressure on unemployment. So it's not really conducive to a strong retail environment. So, you know, we're cautious about it. We're going to set ourselves up in the way that we have in 2009 to trade through it, provide great value to our customers, keep a control of stock, costs, etc. But we're cautious but positive about how we're positioned.
What about margins, how much you make on every product here? How much under pressure have they been in the run-up to Christmas, and how much under pressure are they looking ahead as well?
Well, there's been a number of factors. If you take the two sides of the business separately, in general merchandise, there's been a pressure from currency, from the weakness of sterling against the dollar. That, to some degree, is moving itself out now, and we've done a good job in mitigating that. So that pressure, to a degree, has gone away. So what you get now is, if you like, there's no pressure on the cost of products. It's all about making sure your values are good for the customers, and it is a very competitive environment. But we've done a pretty good job on margins in GM. In food, you know, we have invested in margin over the last year or so. You know, we've been very clear that we want to give better value to our customers, and we've invested in margin. That's served us well, and you've seen in the positive like-for-likes that it's coming through. But as you go through to 2010, yes, there will continue to be pressure on margins, but we think we've set ourselves up well to, if you like, to be able to mitigate most of those pressures and move the business forward.
Yeah, how do you grow the business? Let's take the food side of things first of all. You've had, of course, you've discounted with others. You've done meal deals like others as well. Slightly different, albeit. But, you know, what's next in terms of innovation there?
Well, innovation is a key part of our business. You know, we are a premium retailer. We're renowned for our innovation. We've stepped that up, so the number of new products that we're launching every week has increased, and we're being successful on that, and that's the way we've got to continue to trade, as well as offering great value to our customers and offering some of the promotions, like the dine-in for £10. We've got to continue to do those. They've been incredibly successful. We've got to fight. It's a very, very tough market. We're under no illusions about how tough the food market is. We've got to keep doing the things that we've been doing over the course of 2009.
What's your favourite dish that you serve up there at M&S?
I'm quite partial to our Indian range, actually. I think our Indian range is fantastic.
What about looking at the general merchandise side of things as well now? You know, you've had Autograph, you've had various other labels that you've actually introduced over the years. What's next there?
Well, in 2009, we introduced two new labels, Indigo and Portfolio, within women's wear, both being very successful. We'll continue to try and segment our offer because we are the largest in the market. We have 10% plus market share, and we appeal to a broad range of customer base. Segmenting that, using the different sub-brands, is a key part of what we've got to do. We've got some clear plans for how we want to move the business forward. I think we've got some great spring products in the stores already now, and we just got to keep trading in the way that we have. You know, it's a tough game, retail, but, you know, we think we're positioned well.
You mentioned market share. You said in your statement that you'd increased market share by 20 basis points, like 2%. Where did you take it from, do you think?
I think it's across the board. You know, I think it was a tough market, and in each area of our business, you know, we did well on market share, women's, men's, kids, etc. I think we probably took a little bit from a number of different people. No one, if you like, competitor in particular.
You must have met incoming Chief Executive Mark Boland. What did you make of him, and you know, what sort of difference does he bring in terms of strategy?
Well, I can't comment on what difference he'll bring in terms of strategy. He clearly hasn't started. I think he's a great hire for the business. I mean, clearly his track record speaks for itself, both in Heineken and in Morrison's. And I think he's got great credentials, and we're looking forward to having him in Marks Spencer.
Very quickly, do you think you're going to have more of an international focus looking ahead?
I wouldn't say more. We've said very clearly that international is a big part of how we want to take the business forward. We make over 100 million profit today. It's something that we want to grow over time. So if you take a 5 to 10 year view, we would expect international to be a much bigger part of Marks & Spencer.
Ian Dyson, thank you very much indeed for that.